What if I told you that mastering trading isn't just about technical charts or economic news, but about mastering your own mind? In today's video, we're diving deep into the psychology of trading, something most beginners ignore until it's too late. You'll learn why over 90% of traders fail, not because of lack of strategy, but because of mental traps they walk into every single day. Stick around, because if you don't understand these psychological pitfalls, the market will use them against you again and again. Smash that like button, hit subscribe, and let's jump into the mindset that separates winners from losers in the world of trading. The charts are clean, the setup is perfect, the indicators align. You enter the trade and boom, the market reverses. Was the strategy wrong? Maybe, but often it's not the system, it's you. Trading is not like a 9-to-5 job. It doesn't reward effort. It rewards discipline and emotional control. Your brain is biologically wired to lose in high-stakes environments like trading. Imagine watching your trade go red. Your heart races, palms sweat, you panic sell, then it turns green. Familiar? That's not a strategy problem. That's psychology. A Harvard study shows that emotions like fear and greed override logical decision-making, especially under pressure. Trading amplifies that effect 10x. One of the biggest killers of trading accounts? Overtrading. Why it happens? Boredom, revenge after a loss, the illusion of opportunity in every candle. Overtrading is linked to dopamine addiction. Every executed trade gives a mental high. Your brain seeks that hit even if the setup is poor. Example, you took a loss and then immediately jumped into a random trade trying to make it back. That's not strategy, that's revenge trading. How to fix it? Set a max number of trades per day. Use a trading journal to record every impulse trade. Walk away after a loss, always. You see a pump. Everyone on Twitter is talking about it. You rush in, and you're the last buyer before the crash. FOMO is a killer. Psychology, the fear of missing out, taps into evolutionary survival instincts. Our ancestors needed to follow the group to stay alive, but in trading, the crowd is often wrong. Example, think of Bitcoin pumps or meme coin spikes. Retail traders pile in late, and institutions sell into that hype. Solution, predefine your trades. If it's not part of your plan, skip it. Remind yourself, opportunities are infinite. My capital is not. Use alerts, not emotions, to enter trades. You're up 80%. You could close the trade, but something says, just a little more. That little more wipes out all your profit. That's greed in action. Psychology, the reward system in your brain, primarily dopamine, makes you crave more once you're winning. But markets punish those who get greedy. How to fix it? Set exit targets before entering a trade. Don't move your take profit unless your analysis changes. Lock partial profits. Don't aim to catch the top. Some traders never even take a shot. Why? Because the fear of loss paralyzes them. They overanalyze. Wait too long. Miss the move. Psychology. Loss aversion is a cognitive bias where the pain of losing is twice as powerful as the pleasure of winning. This leads to missed trades, premature exits, inconsistent execution. Solution, accept that losses are part of trading. Use stop losses religiously. Focus on risk reward, not win rate. Do you hold on to losing trades because closing them means admitting you were wrong? That's your ego sabotaging your capital. Psychology, people hate being wrong. But in trading, being wrong is normal. Even the best traders have a 40–60% win rate. Don't aim to be right, aim to be profitable. How to fix it? Ditch ego. Embrace statistics. Close bad trades fast. Winners take care of themselves. Journal your losing trades. What did your ego say versus your strategy? Okay, we've uncovered the traps. Now let's talk about building a winning trading psychology. Here's how. Create a trading plan. Define your strategy, rules, and max risk. Journal everything. Track decisions, emotions, and outcomes. Practice mindfulness. Meditation or breathwork helps build emotional control. Backtest and simulate. Build confidence through data, not hope. Detach from the outcome. See each trade as one of 1,000. No emotional attachment. The market is a battlefield, and your greatest enemy is not the chart, not the whales, not even the volatility. It's your own mind. If you found this video valuable, subscribe for more no-fluff trading content that helps you grow not just your account, but your mindset too. Comment below, which of these psychological pitfalls do you struggle with the most?